Meta is heavily investing in open source AI, specifically its Llama models. And the approach that Meta is taking is a little bit different from, for example, Google, DeepSeek, or ChatGPT, because Meta wants to become the foundation of the open source AI ecosystem. So they don't want to have a closed environment, but they really want to chase the open source ecosystems, giving developers the tools to build freely on top of their infrastructure. And as we can see in this benchmark sheet for Meta's Llama model, comparing it to competitors, we can see that the performance and actually the numbers are looking really good for the current models that are out. Now, there is also news that Meta is going to fully transition to a 100% AI ad optimized setup, where currently they're also using some sort of AI for their ads. They're now aiming to make it fully 100% AI driven. So that's going to be on Instagram, but also Facebook. Maybe we now also see them monetize WhatsApp more and more. So I think as that continues, it will improve targeting, optimize delivery. So they also have now threads, of course, which they can also start to monetize there. I think with all of these developments, the AI systems will only become more valuable. As of 2025, Meta has over 3.4 billion daily active people on its platforms across all of their apps. That's more than any other platform on Earth. If we look at total revenue, we also see a huge jump there year over year, with last quarter reporting $42.3 billion at a compounded annual growth rate of 27%. Meanwhile, the operating margin is now sitting at around 41 to 42%, and it's showing just how profitable Meta has become again after all of the Reality Labs investments, which didn't pan out too well. And if we look at the valuation, we can see that the 4 PE is currently sitting at around 27, which is still cheap, in my opinion at least, relative to its growth and also the profitability that is showing. I think Meta is nowadays no longer just a social media company. It's becoming an AI-first, data-rich platform, which is dominating at the global scale. The next AI super player is Amazon. Amazon is currently transforming itself into the backend of the AI internet. Through AWS, they've launched Amazon Bedrock, which is giving developers access to foundation models through a simple API. This means, in more simple terms, from startups to Fortune 500 companies, they can start building on top of cutting-edge AI without spinning up their own models. Amazon is now also producing their own AI chips. The first one is Trainium, and the other one is called Inferentia. These ones are trained for specific models. So this is letting Amazon control cost better, scale better, and also reduce their dependence on chip makers like Nvidia or AMD. This vertical integration is going to be key in an era where compute demand is skyrocketing. And people often joke about stuff like Alexa, that it doesn't work, or they make fun of it, but I think otherwise. I think it shows that Amazon is moving, especially nowadays, into a way where they want to transform AI and make it applicable to real-world usage. So Amazon is currently integrating generative AI into Alexa to finally make it conversational and intelligent, basically bringing AI into your home in a way that's deeply embedded into a consumer's life. We can currently see that AWS is growing at a 22% compounded annual growth rate and still makes up for the majority of Amazon's operating income. Because it's so profitable, they just try and scale it more and more, which is currently working, and that increases the profitability as well. Total revenue growth is also still in double digits at a 21% compounded annual growth rate, showing that the entire business is actually accelerating in growth again post-COVID. And if we look at the specific revenue per segment, we can also see huge growth happening here, especially in the advertising business, which is now bringing in around $56 billion last year. And while all this growth has been happening, Amazon is currently trading at a forward PE of 34, which is a fair price considering the strength of AWS, but also the future AI monetization potential. I think Amazon is still very, very cheap nowadays, as it's rapidly becoming a diversified AI leader. It has cloud, it has infrastructure, and also the customer verticals, all basically in one company. AMD is currently positioning itself as NVIDIA's most serious AI challenger. Their MI300 chip is a new GPU which is now finally shipping, and big names like Microsoft, Meta, and Oracle are already deploying them in production environments. And what we are now seeing is that unlike in the past, AMD is now delivering competitive AI performance with both price and power advantages. So their chips are optimized for large-scale AI inference, and with hyperscalers looking to diversify away from NVIDIA, AMD is one of the right places at the right time. Add into this the smart investments which AMD is currently making, such as the recent acquisition of Xilinx, which AMD acquired, and now they have a strong edge in both embedded and edge AI, powering everything from autonomous vehicles, but also things like smart factories for hyperscalers. That's really a segment with massive potential in the coming periods. The most important financial metric for AMD currently is that their data center revenue grew by 56% year over year. This was driven by early heavy demand from AI, but also from their new chips. This has also boosted their total revenue by a large margin. On top of this, they also have given strong revenue guidance going forward, especially for AI and server chips. And this is the most important chart for AMD currently. It shows the imbalance between the forward PE and the total revenue growth, which is accelerating. So taking that into account, the forward PE of currently 31 is very cheap, especially if we compare it to the NVIDIA's multiple, which is currently 50 plus. On top of that, we are seeing all-time highs for their gross profit margins, which is really good to see, and also the operating margin, which is improving since the dip in 2022. In my view, AMD is no longer just a CPU or GPU company, it's becoming a top-tier player in AI infrastructure. Microsoft is arguably the most powerful force in enterprise AI. Their partnership with OpenAI means they are deeply integrated with ChatGPT, which is now baked into everything from Microsoft, which spans from Office to Windows to Azure. They're not just using AI to improve products, they're also redefining how people work. The best example of this is Copilot, which Copilot is kind of an enterprise ChatGPT variation, which is used mainly in financial institutions where they need a little bit more control and safety, and that is what Microsoft is offering. So users can now, for example, generate documents, summarize emails, write code, also automate workflow across Microsoft's entire ecosystem, which then also works with their other products. What we are also seeing with Microsoft is that Azure is rapidly gaining market share in AI compute services. They are investing in AI infrastructure, and it's helping them compete directly with AWS from Amazon that we looked at before for the next generation of enterprise applications. If we start looking at some of the numbers, it makes a lot more sense to be bullish on Microsoft as well. Because if we look at cloud revenue, for example, we see that accelerating in growth at a compounded annual growth rate of 40%, which is absolutely huge. And Azure alone brought in $42 billion last quarter. So we see this reflected in the total revenue amount as well, where Azure is a huge part of it, with Microsoft Cloud bringing in $42 billion of the $70 billion in total revenue last quarter. The stock currently trades at a forward PE ratio of 33, which historically is pretty high, honestly. But I think given the potential that Microsoft currently has and also the dominance that they're showing in enterprise AI, that it is justified, and I still think it's a cheap valuation for a forward PE. Operating margin is currently trending at around 46% and it's actually climbing, which is absolutely insane at the scale that Microsoft is operating at. We are also seeing a massive $70 billion being generated in free cash flow per year. So this is giving them the ability to allocate plenty of capital to reinvest into things like AI and be at the forefront. With all this being said, I think it's clear that Microsoft is not just participating in the AI boom, it's leading it, especially in enterprise, and I think it's undervalued today. Last but not least, we have Google. Google has been researching AI for longer than almost anyone, and now they are finally putting it to work at scale. We are seeing their Gemini model suite being integrated into Workspace, also Android, Search, Chrome, basically their whole suite of apps, reaching billions of users instantly. They're also now advancing into things like advanced audio dialogue, but also things like VO3 and Imagen 4, which is video generation modeling and also image generation modeling. They're also trying to step into the world of AI agents and making that accessible for consumers. So where we see Microsoft targeting more the enterprises, we can see Google chasing more the consumer aspect. We are seeing Google push AI into every service that they are offering currently. So that's search, ads, YouTube, also the cloud. And basically every Google product is getting smarter, faster, and more personalized to every user thanks to the developments in AI. They're no longer just a data company or selling ads. They're an applied AI company at global scale across all of their services. Google reported a total revenue of $90 billion last quarter. This is a compounded annual growth rate of about 18%. And if we look at some of the most important segments for Google, we can see growth happening there as well. Both for Google Cloud and YouTube ads, we saw an accelerated growth in the compounded annual growth rate. And let's not forget that Google is an absolute cash-making machine. Last year, they made over $70 billion in free cash flow, giving them massive optionality for R&D, buybacks, acquisitions, but also investments into AI. Combine that with the total revenue growth, which is accelerating again, and the forward PE of just 19, which is near all-time lows, I think Google is super cheap today. And I do believe that the market is mispricing Google as just an ad business or a search business where it's so much more today and is transforming into an AI powerhouse. So the multiplier should be much, much higher, especially with the growth that we're seeing in revenue and free cash flow per share. And I will definitely be buying more of Google. And what's driving all the momentum for AI in 2025 and beyond? It's basically the hyperscalers investing a ton of money into data center growth, but also AI initiatives. And just 3 companies that we cover today, which are Amazon, Microsoft, and Google, just those 3 names are planning to allocate over $250 billion in 2025.